Hello, hello, hello. Let's build some options trades that are going to make us feel blessed, fat, happy, and rich. Got a lot of charts to look at today. We got a lot of exciting stuff going on in the market today. I think we might have seen a little bit of hope when it comes to upside here for a couple of names, Tesla being one of them. We're going to keep very close watch here on these names as we go through the charts for the day. We talk about where they're at, where they're going to go, and we start to put together some trade ideas for some long-term options that are going to make us, again, fat, happy, or fatter, happier, and more rich. So let's get into it. I'm going to pop my chart up here so y'all can get a little taste of what's going on here. Trading view or Stink or Swim takes forever to load, so my apologies for that. Took absolutely forever to get it up. So we're not looking at BBBYQ because who cares? We're going to take a quick look at Tesla. So I wanted to get this drawn out so we can just rip right into it. So as you can see here, I've already got a few things mapped out here. So we are on the monthly chart for Tesla. Very important to understand this is the longer term time frame, right? We need to know and understand what the difference is. The shorter time frames are better for shorter term trades. Bigger time frames better for the longer term trades. We want to truly understand the trend and direction. So last week I started to map this out. Oh, we need to make a little adjustment there. There we go. We mapped this out. I found two little sweet spot pockets that I'm very interested in. This little green bubble here and this little green bubble here. So let me tell you what these are. These are basically my expectations of where I think we're going to go should we hold up. So let's say right now we're saying, okay, we might hold up bullish here just above 243. For those of you that follow me on Twitter, if someone could link the account, I was talking about how Tesla has to hold and consolidate the 240s. If it does, then more upside is closer to us than we may have thought. So make sure to follow that account if you're not, because it's straight up gold I'm dropping there. If you're already in the Discord, you don't need to worry because you're getting a taste of that before anybody else. So these little green bubbles are just quite simply points of confluence and areas in which I think the price will go should we continue to see more upside. Don't worry about the top and bottom. They're just to indicate basically where I think on the chart we're going to end up relative to time, right? Because we have to know if we're trading options what the time frame is, time horizon, right? So our expectations were if we hit by November 261, 260, we're in a good spot. We want to see above that, right? If we do, then we're going to stay in the upper echelon of this nice little fib fan we've got drawn here. And we need to make a slight adjustment. Sorry about that. So we've just broken above it on the monthly chart. So we don't want to see is us coming down to 218 and holding there. We want to see us hitting this little pocket right here, which I guess now we have to move that. Sorry about that. It's a little sloppy. I didn't realize those were off. I was drawing them on the big time frames. Nevertheless, oh, we need one more right there. That is there. Boom. That I think these are three options for a bull case if we're looking at Tesla. One would be that 260 break above there on strong volume and extreme volatility. Then it's very realistic that I think we test 315 by February, so Q1 of next year. If not, and we have a little bit more consolidation around 240, a little steady Eddie, if you will, then I think we're going to hit the same price target, 315, but I think it's going to take a little longer, and we're looking at mid next year. However, keep in mind, Tesla does have a proclivity to move quickly. If you look at the last time we pressed at 260 and above, was back in October. So very interesting here because we moved in October from 260 all the way to 373 in 1 month. And in 2 months, we moved as high as 414. So keep that in mind. Now we are trading off the lows, and this is a different market, right? But nevertheless, stock always has memory. The chart always has memory. And in these pockets where we do have this memory, it's very important to understand what happened before so that we can estimate what we think is going to happen now. What's up, doctor? How you living? So as always, we need to understand that stuff. So if we're headed to 260 now, we're almost hitting that right now. Okay, great. So what does that mean for the next one, which is mid-February or as late as June, up to 300 plus? Very important here that we find our bottom and that we start to consolidate. I don't like this as entry right here. I'd much rather see a dip down between 220, 230, hold this trend support right here at the bottom, or a strong breakup above 259. Okay, so these are the two options we're going to look at. If we get that break above 259 in the short term, right, we are going to aim for about 300. I'd say the 300 calls or 320 calls would be a good way to start. and we will be dating those past when our expectation is that we hit the target, right? So if our expectation to hit the target is February, then we need to be trading out to January or to, sorry, excuse me, we need to be trading these out to June or July of this 2024, because we need to give ourselves enough time that the theta decay isn't going to murder the position, right? Because here's the thing with options: stock goes up, but it takes too long, you lose. Stock goes up, but it happens too quickly, you win, but you lose out on a lot of long-term opportunity, right? Stock goes down and you're betting the upside, you lose. Like, there in every option, you lose unless you precisely calculate both where you think it's going to go in terms of the strike and how long it's going to take in terms of the time, right? So like that would be our Y, is how high we think it'll go, and this is our X of how long it'll take. And then we need to find that little point of correlation, right, somewhere on the chart to tell us that this is A, a good decision, B, a good target, and C, the timing is right. So how do we know if it's a good decision? That's a great question. Well, is it maintaining trend, and are we seeing continued strength, right? What is the volume telling us? What is the RSI telling us? What is the chart telling us, most importantly? Number two, where can this price go? Well, we figure that out by testing highs and lows of previous ranges. That's what we've got mapped out here. And then step number three being, how long is it going to take? Well, we use additional tools like these fib arcs, fib fans, and then obviously our ranges to find points of confluence, basically where these indicators meet, that tell us this is probably a good data point. That's how we find our time. That is a simple 3-step method I've never been able to elaborate on before. So I'm very happy that I was able to put that in simple terms. So if you want to, Pookie, go ahead and write that down. That was wonderful. I didn't realize I could put it so simply. Sorry, I got to fix my chair. So Tesla's numero uno on this list because, again, it's a big mover. It's a fun one to trade, and options can be a blast when you're trading this one. So again, we want to be very careful about how we plan this trade out, because we don't want to go too early, too late, or we don't want to buy too soon, right? That's the problem with options. If your dates are off, your targets are off, you lose. We can't lose. So how do we lose? How do we win, right? We set appropriate price targets and appropriate time frames. So in looking at this, let me ask you guys this. If we were shooting for this target of 300, 312, right, for February, that's our target date. Where would you, for those of you that trade options, where would you set the expiration on that, right? Where would we want to be looking in terms of the expiration of those contracts? If you don't know, we're going to elaborate on this, so don't get too wrapped up. If you don't fully understand options, I'll go into a nice little simple formula explanation, but I just want to see what everyone knows up to this point. I know a lot of you have been here a long time, trading with us a long time, been trading a long time. So you should know this in theory. So I'll wait for your answers. Just type them in the chat. Looking forward to seeing what you guys say. So again, if our target date is February, when do we want to buy the options contracts for so that we don't get destroyed by theta decay? Anyone? We got some answers. We got February, and then we had another guess at April-ish, another guess at June, 2 guesses from my man. I'm assuming that means March, April. That would be where you'd guess for those expirations. So I would say that the closest answer we have so far would definitely be June. Okay, so we want to look at this, like I said, on a bell curve, right? So as you're going up, right, and approaching your target, okay, great. You want to basically be hitting your price target at the top of that bell curve. So here's how the bell curve works, right? Theta decay means the options contracts decline in price over time just because the odds of them being in the money decrease if it's not in a certain threshold. So as we go up, we want to hit that price target right near the top, or the top 50% of that bell curve, because eventually it comes down and comes off. So realistically, I would say that we'd want to put at least three to 5 months. Oh, thank you. We want to put at least 3 to 5 months on those options, guys, because at the end of the day, we can't have them expire worthless, and we can't lose money on those. Sorry, I can't breathe. I need to get a little friend in my life. My allergies are terrible. Don't get hooked on the friend, man. It's bad for business. You can never breathe without it. So that I would say is probably the closest answer. I personally think that I would shoot for June would be good, but July, August, if you can afford it, right? Or we can create a debit spread. So don't get panicked that I can't afford this. I couldn't trade Tesla. It's crazy. Yes, you can. So now let's take a look at the Tesla options chain. So we talked about yep. So we talked about looking at June, right? So let's take a quick peek at June 2024. Okay, great. Let's find our strike. I know it seems complicated, and it is, but we're going to make it as simple as possible. Here's our strikes right here. So we're just looking to find that target, right? So we said, wow, some odd targets. We said, what did we say? 315. These are weird. Well, I don't know why it's like that. But let's say 310, right? And we're looking at the call side. Let's see what those are priced at, right? So this is a chart, much like a stock chart, but for options, right? This is showing you the price of the actual options contract. So when these were written right back in September when Tesla was trading, these were up at 105. These were booming. So these were over $105 contract, right? Meaning 10,500 per contract because it's times 100. So open interest has continued to rise as prices come down. It's trading now down to about $2,400 a piece, right? So big volume here. So when these were about 2,400 to 3,400, okay, cool. So now let's go back to the Tesla chart. If we were looking at this, those I think would be appropriate. We need to first kind of figure out what our cost basis is so that we can build this in and understand the long-term position here. So let me take a quick look. If we were looking at, let's look at the difference between the spread, right, on Tesla. So if we're going for that 310, okay, the calls are priced at about 2,400, 2,500. And if we go across here, the puts, because these are in the money, right, priced at about 7,300. So about 3 times more. So if we're going to open a spread, we would look at buying this 310 at about 24, 2,500. Then maybe selling this 320 at 23.30, right? So there's a nice little spread there. Spread is actually not as wide as I thought it would be. So basically what that means is our cost, you subtract this, you go to the 310, say it's priced at $2,500, right? You then subtract the price, the cost of 320, right? The price, 2,300. So these would in theory cost about $250 per contract instead of 2,400, which means you could still trade it if you're not trading with a massive account. So that's a great thing. So if we were looking at Tesla, we would be looking at June. We would be looking at that 310 strike, and we would be looking to open a spread. That would look, I'll type it in the chat for some of you like this. BTO means buy to open, right? 310 call. Oh, what was that exact expiration? June 21, 2024, so 6. These are for the same expiration date, which means your total cost would end up being around, depending on the spread, per spread, it would be around 250 to 300 per spread, right? So here it is written out here. Your BTO, buy to open, 310 call, June of 24. Sell to open, 320 call, June of 24. Right? So basically that means your total cost would be the difference between the two, which is about 250 to 300 per spread. So you can take a Tesla option that traditionally people with accounts that are smaller couldn't take, and you've managed your risk right to the total cost, which is 250. So instead of putting 2,400 on the line, you could still capture the move, but for only a $250 premium, right? So that's a win. That's great. That's wonderful. And that's one that I'm looking at right now. I'm not yet in the position to say, okay, I'm ready to buy, because I want to see how we pan out right here. Let's go into a little bit of a smaller time frame. I want to see how we pan out right here, right? So we're trading below that 259, 260. So right now we picked back up above trend. We pushed pretty high back in mid-September. Then we sold off, and now we're holding at trend again. We want to make sure that we're not falling one more level to this trend line right here, because that would put us in a very different position with this trade. So I do like right here that we have about 208, looking at that as bottom where this really turned over. And then we look to about 230 as being our next bottom where we really need this. So that would be like the price floor we need to see hold. And as I mentioned, I like that consolidation above 240 is a clean break of the range, right? So we held that support here. We're holding that support here. We gapped up to here back in June of this year. And then if we go back in time, we can see that we were interacting with this price range right here, trying to hold up as well. So when you find that much evidence, right, you're just building evidence to make a case that this trade makes sense. But you want to be unbiased so that you're not deluding yourself. So if we go back a little further, oops, didn't mean to do that. Sorry, let's give ourselves a little more time. 2 years and look at the daily, right? Let's go back to that same range, 240, okay? If you go back in time, you can see that right here, big buying picked up below 240, which is strong demand, right? So demand zone here, good. Demand zone here, good. Demand zone here, demand, 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 demand. Buyers were just gobbling this up around 230, 240 back in June of last year, right? So we know buyers like it here. Okay, great. So why wouldn't buyers like it here again? Now, they might not, but we at least have that to go off of to make that determination that, okay, in the past, buyers have continued to like it here. We can make a calculated decision, right, and take calculated risks that they will again. Another interesting point, right, this 260 area, if you go back in time, very critical for a breakout. So if we look at what happened here back in October, breakout, 260, 414. Then we look here, support test, push back up to 300 plus. Then we traded just below. We pushed to about 294, came down, then had another boom, 380, right? So this thing ripped. Then we traded quickly through this zone to downside. But once again, up, down, buy low, sell high. It's that simple, right? 260 breakout, boom, 314. 260 breakout, boom, 314. Then we did it almost again here, right? So we're taking the same move we've seen happen 1, 2, 3, 4, 5 times, almost 6 times, right? And we're just estimating that we're going to see a similar or same move in the future because buyers buy it where they like it, sellers sell it where they don't. If buyers always liked it here and bought it here, this stock is one of the most institutionally and combination institutional and retail invested stock, right? So retail buys this more than they buy anything else, at least in the most recent reports I've read. So retail buyers keep buying there. If institutions keep buying there, then we're in a great spot and we're going to absolutely crush. So we mapped out that trade. And obviously when I'm ready and I think the trade makes the most sense and we get it in the right position, that's going to be posted in the Discord. If you don't have access, I'm going to put a banner at the bottom here so you can get your access and you don't miss out. For those of you that were interested, I got a lot of questions. I'm going to also kind of showcase the Stocks Buddy deal that has been built by our team, which is phenomenal. Everyone's worked hard to make that thing fucking beautiful. Pookie especially, bravo, cheers to you. If you're already in premium, just hold off. We're putting together a bundle. It's going to be the most cost effective for you above anyone else, obviously. And we're going to put together a bundle for both premium plus Stocks Buddy, so you get both, but you're going to be spending significantly less. If you're non-premium, you're going to pay the regular price. That's the deal. If you want the bundle, just obviously give us a minute. We're not yet ready. It's not yet released, but we're putting it together right now. Pookie could speak more to the date on when he thinks that'll be done. Pookie, but just hang tight. I know a lot of you have seen it and you're interested in it, and I promise you we got more will be revealed along with a number of other indicators. We're basically building a suite of trading tools so that everyone has everything they need. But for those of you that aren't in to start, definitely want all the banners are gone on StreamYard. That's crazy. I'm going to post the link right here if you want to just get in, create your free account here. Get access to the free alerts, the dashboard, the watch lists, everything that's your golden ticket to trading, baby. So that's what I like on Tesla. Also, as I mentioned before, I think we have a very beautiful inverted head and shoulders here. If you look here, like solid base on the shoulder, we got our head, right, the pinnacle. And that's why I also drew these arcs from the center of the head, because I think that gives you the best extrapolation outward of what's going on. And then we have the right shoulder right here, obviously breaking the neckline right at about 260, which is why that area is so important. So keep a close eye on that. This one's going to be very interesting. I think there's a lot of upside here. Let's get into the SPY and take a little peek, poo, at what we got going on here. Ooh, got a lot going on with the SPY. At least I got a ton going on in this chart. So yes, I've already been mapping this out. I think that on the SPY here, we had our two outcomes we talked about last week, right? So bears taking us to 415, 416, bulls 430 first stop, and then inevitably 440 to 460, depending on how quickly we move up. So as you see these little cross sections here, look at these as little boxes that we want this thing to trade in, right? So if it's holding at trend support here, we want it to trade back up to 430, and then we want to see it trade back up to ideally 470, but worst case scenario, still a good scenario, 450. So looking at the SPY, those are our estimations, right? We're hitting oversold right here. We need to hold up. If we don't, we're absolutely screwed. To switch to the weekly view to give you a better long-term vision here. On balance volume continuing to go up, right? Decline quite a bit. Also following RSI, these are lagging indicators, right? So these tell you after the fact what happened. But I just want you guys to get some insight into what we look at internally so that you can start to learn these things, put them into practice for yourself. Long-term trend support is this purple boy right here. It's keeping us just above 380s. What we really want to see is that strong bolstering of support from back in October right here. If we get demand in here, guys, I think we're going to stay bullish for the next couple months, and we're going to see some upside to 440 to 470, and there will be some calls to trade there, and we are going to trade them. On the intraday, going to the hourly chart here, strong buying into close, right? Buyers really showed up today, and they really tried to hold us at 425. So my bottom dollar is this 422.30 right here, right? This previous low. If we break below that, we're done. RSI held up today. We're getting a little divergence here. Like even though we trespassed a new low, RSI didn't trade as low as it did back in between Tuesday, Wednesday. So what we need to see is a push above this very major pivot point on the SPY. $430 is the point you must have marked in your chart. You have to know it. If we break over that, we're back to bull town. If we stay below it, we're in the bears territory. That pivot point is going to tell you who's really in control. We stay below, bears are going to take this and run. If we stay confirmed below, if we can push back up, bulls are going to take control, and then we're going to test 442 and change, right? We sold off harshly, so we should move quickly through that area, which means there's going to be some great opportunity for some great options trades to make some quick and easy money, baby. So that's what I think on the SPY. I would love to see a strong open tomorrow. Market opens up. We test 430 and boom, we break out above 430. I think some calls are in order. I would look at like 433 as a strike. Buy them a couple weeks out. I would look just to look at the options chain real quick for you, just so you have some direction. So we've already got some trades we're working on right now. But for those of you I know like to day trade, I'm sure Ethan will be in there. So as always, follow that to the T. But I like late October, like October 20, October 27. Give yourself at least 3 weeks expiration. And I would look at like those 433s. I think those are primed. Those would bode pretty nicely. I think there's decent open interest and volume there. Let me take a quick peek. Yeah, good open interest, good volume, good delta. Those would be perfect for a nice intraday trade, right? So we open on the SPY tomorrow. We open kind of right here in the middle, strong open. We hold our price action from today. Ideally, we want to see an open above where we close. So if we closed right here at 427.37, we want to see an open above that. When we do see an open above that, here's what we're going to do. We're going to open above 427.37, right? That's strength. We like that. We're going to then look at those calls we just discussed, 433 calls. Dated to October 20. Give yourself a couple weeks. Those are currently, they'll be priced a little lower because of theta decay, but they're priced around $300-400. You can create a spread, buy the 433, sell the 435. For those of you that want to take a little more risk, I'd say give yourself at least a week. But those October 10th, right, the 433 calls are about $1.68. In my opinion, far smarter to pay $150 more to trade a few weeks out on expiration than buy those extremely high risk ones, but to each their own. This opens above 427.25. We trade to this upside move of 430. We watch to take profit there. If we get rejected and come down, We close out at a net profit, great trade. If we break out, we close some, or we hold on with a stop loss in place to see if we test 432 and maybe even 433 on good strength, right? So if we see strong volume at the open, that might happen. I do think we're seeing this divergence here for a reason, and I do think this chart's has a possibility to turn over here. So that's how I trade the SPY tomorrow. That's the easy walkthrough. There's no way anyone should lose money on that. But just for proof, everyone's like, did you really call it? Did you really tell anyone that happened? Yeah, I did, man. Let me see. So SPY. There it is right there. The 433 call, ideally dated 1020. If you want more risk, 1010. We're going to trade if guys, pay attention. This is what you need to put in your notes and mark this on your chart. If you're not marking this stuff, then you are selling yourself short and you're not going to make money. If you mark this down, you'll know exactly what needs to happen on the SPY for you to take the trade, make some money, and go about your day. We need to open above the close. So we need to open at about 427.5, right? When we open at 427.5, we want to see this push to 430, sell on the way up. But if you want to trade the breakout, you can hold above 430 and see if we push higher. I think a move to 431, 432 is very possible. As you can see, we did it here. So this day right here would be kind of our template, right? So it opens 429, comes down 428 or so. Then it just starts to rip, right? Pushed up, sold off, bottom again, and went to close at about 432. That would be a phenomenal. I would love that for the trade for the day. You want to see the buyers come in strong off the open, or you want to see like a weak open and a support test, but above 425.31. So I guess this is option number 2, alternate. If this opens kind of neutral, weak, and comes down right at the first 30 minutes to an hour, I would buy this 425 support bounce. Same contracts, right? Just like you see right here. Open, boom, and then it shoots 430. That's an easy move, right? And it found support here again, held above 426 yesterday, came to a new low today, but above 425, I think that's a money trade. Those are your two options, right? Open above the close, trade to the breakout, or soft open, boom, support test, buy, trade the whole range up. That would be an even more profitable trade. Bada bing, bada boom, you make money, you get rich, you be happy, and just invite me to your barbecue. That's all I ask. All right, do we have any questions so far? And if there's no questions, please just say, hey, no questions, so that I know that we don't have a lag or delay and I'm not waiting on you guys. I'm always waiting on you guys, huh? So questions, drop them right here. Questions, huh? Come on. Come on. Give me taste those questions. I know you got questions, guys. This is literally your opportunity to ask them. I put the link in here. If any of you have questions for real and you want to ask them audiologically, you can click that link and you could come here. I'll bring you backstage. I'll put you on. You get a free show for the people. You can ask your question and we can work through it. Otherwise, just type them in the chat. There's no way nobody has a single question. I don't buy it. I don't believe Wow, you guys are serious. No questions. Come on. Come on. Nobody's got a question? Questions? I don't even know how you'd ask that. Pookie, you've got a question. You've always got a question. There we go. Okay. True Scopes. What's up, baby? I was wondering how you manage short legs in spreads, when to buy back short leg on a spread. Okay. So it depends on what the intent of the spread is, right? So there's two ways that we'll talk about. There's more than that, but these are the simple ones that probably apply to most traders. There's opening a spread to lower the cost basis where you have no intention of buying the short leg back, right? That's option one. That's the most common. Option two is you're opening the spread to manage risk, right? So let's talk NVIDIA. Perfect timing to bring this up. Perfect example. Let me pull that up, though. Let me pull up my account so I can tell you exactly when I bought it back, because I bought it damn near the bottom. I think I missed by one day, but I did all right. I did pretty well. Yep, I bought it right here. So I was a little early, right? So on the 18th, so this NVIDIA trade, right? So we were long on this for a very long time. Like we were buying this like what? I want to say like right here, 150s, 160s, right? This was back, I want to say it was August or something like that. So maybe even a little further back. We were buying right here on this sell-off. On this NVIDIA trade, right? We were long. We're up thousands of %, right? So I didn't want to close it because it could keep going, right? Like everyone does. But I also wasn't going to take the risk of losing all those gains. So here's what I did. I first started shorting it, adding a hedge, right? So I was long all the way up till I started to see sell off, right? So I sold and created a vertical debit spread. So I was long 250. I sold like the 255 of the same expiration, right? I wanted all that money back in my account protected. So I did that right here on this candle at about 460, and then it pushed higher, right? So I was red on the short, and I was freaking out for a minute because I wasn't getting the gain of the upside, right? But then I saw this inverted hammer. I was like, okay, I was right. I was just a little early, but I was right. So I held the short all the way until we hit about, I don't know, 415 or so, because I thought we were going to hold right there at like what is the bottom of that right there? I thought we were going to hold 415, right? We did, but I didn't think we'd go lower than that. So I closed about 415, right? So I went, I added the short when we were up here, 470s, right? The vertical debit spread. So I'm basically just losing on the long, but making money on the short. Then I'm losing on the short, making money on the long, right? It balances each other out. When we hit here, here's why I closed the short here, and this is hopefully will give you insight into what to look at. So I was already watching this very closely like a hawk, right? So I had the bottom of this candle right here, right, which is bullish engulfing right here. It's good. And the bottom of this sell side pressure and the close of this red candle all seem to line up about 415, 417, right? So clearly that was either going to be the bottom of the range on NVIDIA, or it was going to bottom was going to fall out and the fun was over and I was going to close the whole position. So closing the short means I'd lose a couple grand, but I'd completely close the position, have the money in my account, done and done. So I set that on my chart. I then looked and watched the RSI. I did all this back then, right? This was already on my chart. We had our high of RSI, so I was looking for a breakout over 70 on the RSI, but I wanted a support bounce on RSI, right? Like this is what I put on there, 54.5. Here's why I put it there. If you look at this tight consolidation before the breakout, RSI was topping out at about 54 there, right? And we're on the weekly chart, right? Weekly chart. RSI was topping out there. It wasn't until it broke that this thing really started to move. So just like we look at support on price, we want support on momentum, which is RSI. So I mapped that out. I watched. We got the bounce. Momentum didn't go below that point, which tells me we're still going to get continuation. Lo and behold, boom. Now, I thought that would happen a little later. I was waiting till October, right? I thought we'd hit right around here where this green bubble is, but it happened a little early. That's fine. We still might come down here and then bounce again. But either way, as long as this RSI holds up above 54, which means like buyers trend strength continues upward, right? Demand keeps funneling in and the price holds above that 415 or so, I think we're going to go back to about 480, at which point I'll probably add a short again, unless we break out very strongly to the upside above, 485, 490. So that's how I decided that, right? Like I mapped it out ahead of time. Here's bottom on price. I might be early adding the short, right? So whether you're in it already or you add it later doesn't matter. I waited until a pivot point that I think price would either break through and go straight down or price would hold up and bounce. So if you're trying to make money on the short back down but continue to hold the long, that's what I would look for, is find these points of confluence to tell you, okay, this should be a stable support that should hold. You can close when you hit that support and take that risk. But again, you made money to the downside. That's good. So does it answer your question, or do you want to give like a deeper, give me a better understanding of what kind of strategy you're referring to? Did that make sense? Was that an explanation that warrants a high five or round of applause, perhaps? Hmm? Bada bing. Good. I'm glad it did, my friend. Yes. High five. Yes. All right. Awesome. So through that example, you got my analysis on NVIDIA. So we need go no further. UPS Tizzle. One that we're watching. Oh God, this is the part I don't like about trading view. I always do that. Let's go and zoom a little more. 1 year, 1 day. This is what we're working with. Cascade failure. Boom. We found some bottom. Okay. So this is our critical pivot point we're watching on this. The long trade was posted in the Discord for those of you that don't have. I just want to give you a little insight into why. Past support range dating back to May. We pushed, we did resistance, we turned over, support, we held above here. This is going to be a pretty pivotal support range, in my opinion. And if we go back even further, this is where we went public. This was our going public price where we absolutely boomed from, right? So there's a nice little buyer's shelf of demand there. Here's what's interesting. This is going to be incredibly insightful and wonderful. RSI divergence is a wonderful thing. Very simple way to look at things to get an idea of where to open the door to a new trade idea, right? Look right here. What do you see right here? Oversold, right? We held right at that price. Great. What do you see right here? Oversold, just about, but holding right there. Then we came below. Low of about $7-8, dramatically oversold. Next relative low, 1193. Oversold, not dramatically. Then we have a little bit of a push up. Now we're right on that same pivot point. RSI went incredibly overbought. Didn't quite go oversold, which means sellers weren't able to drive down that much, which is good. So low, low, a little bit higher, a little bit higher. We're seeing a little convergence there, right? So demand and price are meeting each other in the middle, and you're seeing a positive correlation. That's a good sign. Very strong demand buyers here because sell side was massive back in May. That pushed us down to about $25. Buyers scooped that back up and held for quite a while, right? We inevitably lost it, but buyers put on quite a show there. So what I'm aiming at and looking for is for this to be true once again, right? We need to see stronger volume, but this is a wonderful point to take a long trade where you have a very calculated fixed risk reward that is well defined, easy to understand, and something you're willing to deal with a ton of upside, you guys. So let's go back actually. Let's take a look from the lows. Let's just see. So we clapped right through this range, right? Like we need to revisit this to see true longevity of this move, right? So we're just looking for a nice little long-term swing. Now let's do it on the counter to that and find exactly where we'll have to adjust that, obviously. That is good enough. Let's see what we've got. So this is going to be our long-term trending resistance, right? See these long red lines here? Let me make this a little bigger. You guys can see this chart all right, correct? See or no? Can you guys see this all right? Okay, good talk. So this is our long-term trending resistance, right? Very important that we understand this. Actually, there's something I want to do. Where's that low? Also don't know why I didn't do this before. Wait, what? Come on, I just want to remove this drum. There we go. Let's take a step back and let's look at this. Let's forget short-term thinking here. Let's look. Let us look. Let's look at some long-term stuff that'll make more sense. Before we do that, let's also map this up. Let's find where the buyers live. Oh, I like that one a lot. Ooh, look at that. Who said back to 100? Yeah. Kevin K, what's up, baby? You spot on with that. Spot on. So, and look at that realistically. Look at that consolidation. I mean, come on. This is what we got from the past of this range, right? Let's look at December 24. Back to 100. Did that from December. 2 months, $100 move. And then let's look here. March. Less than a month, $100 move. Now, to be fair, that was 2021. Free money. Everyone's getting money. Free money's everywhere. Different market altogether. But again, remember, these stock charts have memory. Important to understand that. Just as people do. So looking at this here, too much zoom. Too much zoom again. Too much zoom again. Why is it doing that? We'll just have to stay here. Let's find these little sweet spot pockets, shall we? Oh, look at that. So we talk about confluence, right? Like you always want to know, where does it turn over? Like, where was it resistance before, right? Where was it the ceiling? And then when did it become the floor? You guys get what I'm saying? Those points where it turns over, support, resistance, matter. Even if it was a year ago, 2 years ago, 3 years ago, because those are going to be the critical intersections where the price is going to want to go back to, right? It's going to continue to follow back, flow back there. So that would be our first one. The first point of confluence would be to test 41, right? So that's looking like February of next year. So let's go ahead and mark that. Right, February of next year. This one I'm not trading options on right now, mind you. So be very aware. We're just trying to get in. I'm just trying to walk you guys through how to understand the time horizon and then the targets, right? Just so you guys are taking this process seriously and doing this right. So, but I'm by no means indicating like, oh, I love this options trade. Then look, let's find another key indicator that tells us that we're heading in the right direction, right? Look at what we looked at with NVIDIA, right? RSI was topping out, right at about 44. What's RSI doing right now? It's bottoming out, but it's holding stable, right? On balance volume, positive and picking up. That's a good sign, right? You don't want to see this decline too steeply. So notice how price declines dramatically. So does RSI, but the unbalanced volume holds, right? So that's a good sign. Very good sign. But just always keep that in mind. These are all lagging indicators, guys. So like anytime we look at unbalanced volume, RSI, these are after the fact indicators, right? And they're telling us virtually the same thing, right? This is like net buyers, net sellers, right? It's just sometimes nice to have different representations so that we have a better understanding. The OBV can be nicer to use because like it's less jaunting than RSI. It doesn't jaunt like that intensely, right? It's a little bit more of a stable flow, but notice how they're kind of following each other because they're telling you basically the same thing. You don't even need them both. I just like to have both as a visual representation to make this more easy to understand. So we're going to watch and see this hold right about 25 and change, call it 26, right? So used to be resistance. Good, good, good. Tried it as support, resistance. Again, same thing. I've told you the story a million times. Support becomes resistance, then resistance becomes support. You know, it's a very important part of the chart to know, understand, and like pay attention to and use it in your trades as a functional point to say, okay, I know that if it holds here, it's going up. I know that if it breaks here, it's going down. You can then choose a direction and have some conviction, right? And so my conviction right now is we hold here, we're going up. First target be 36. And then once we break above that, kind of not say sky's the limit, but we have a lot more upside on the table with inevitably 100 to 108. I think we'll probably bump our heads right around 90, to be very honest with you. But we break above that, we're golden. It's golden goose. We're good to go. So target. Start thinking of the tickers for smash or pass because we're going to get into that in a minute. There's not that many people here today, so it won't be that many, I'm assuming. Ugh. This one's just such a disappointment after such a strong trend. But you know, right there when it broke, I don't know if you remember me telling you this back in June of last year. Downside coming. 100, 102. Let's go back in time. We need to understand what has happened here. So look where we are right now. So yeah, you're pretty spot on. This is where demand is historically generated. It's where the breakout occurred before this took the massive move to the upside, right? But that's 2020, so always keep that in mind. Different market altogether. The problem here is, what do you tell me what you see here? Let's see if you're following along. So like descending price, right? So we're going down, 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 down. What's happening here? What do you see here? Look at this. Look at this. What do you see? Again, look at this. Then look at this. What do you see? Correct. Pookie, you still here? What do you see? Come on, it's your favorite thing in the world. This is your favorite thing in the world. What do you see here on this chart? Correct. We are losing support, but RSI convergence to the downside, right? So the price and the RSI are converging, same direction, right? New low relative to past couple instances, right? So look at the last time we came this low. RSI was not even close to oversold, didn't even go below 33. Yet here we are coming down, RSI down to 24, incredibly oversold, price confirming that, right? They're heading in the same direction, which means the trend is still strong and will continue, is the point. Divergence would be price goes, so divergence means that trend change is looking to appear, right? Or it looks like there's a change in the trend appearing, right? So what we'd look for in that instance is price to find new low, but RSI, say, holds up at 31. So the momentum didn't go nearly as far as it did the last time, right? So you'd want to see a higher high in the RSI, even if you see a lower low on price. That would be indicative of we might be seeing a reversal here, meaning like the market took it too far down. It shouldn't have gone that far. So it's going to have to snap back up, right? So it's a great opportunity to buy strong. Just like you saw, like, what is that, March 2020? Like, took it down, right, to 90. Stream oversold. But if you look in the past, last time we took down to about 90, RSI is way up here, right? So it's convergence, right? But then free money came in the market, so it just completely throws all indicators to the wind. That's not happening right now, at least not to my knowledge. So new low in price, new low RSI. This is a stay away until it finds its footing, and I think you could see as low as 90. Even worse, dude, honestly, 60s, 70s, it's possible. Don't write that off. Remember, all that student debt, loan debt's hitting again. Those bills are on the tape. Credit card debt is at like an all-time high. Delinquencies are reaching supposedly all-time high. All that other nonsense, which means consumer spending is going to be down. So, like, something like Target is not the buy in this moment, in my opinion. So I would do a hard pass on that. So let's see it here. Reverse cup and handle. I never even thought of that, but yeah, pretty much. You can see it here. It was a cup, reverse handle, downside. Smash or pass. Let's see them. Put them in the chat. Let's go. You type the ticker. We take a look, and we talk about in 30 seconds or less whether or not it's time to go long. So let's see it. Drop them in. Come on now. All you got to do is drop it in the chat. 1 per comment, 3 per person. You know what? Forget the limit. Just 1 per comment. Type 10 in there. I don't care. Let's go through them. Let's knock it out. We're going to start with Takak, even though it's not a smash or pass, and now you want to look at it. So let's take a quick look. Ooh. Yeah. Wow. Well, we're a little late, but we nailed that. Target was 677. I don't know if I don't even really, when did I do this? This was, wow. This was back in the day. This was early 2021. I do now remember doing this. That was our target we were aiming for long term, 675. It hit. Not on the right time frame, but it hit. That equity play was phenomenal. Good for me. Good for me. That's always nice to see. You're right. That's the thing with the stock market, you guys. You could be right and wrong at the same time, right? I was correct in terms of where it would go, but my timing was off. That's the difficulty here, is managing both elements. You can be right and wrong at the same time. Whoa, Tom Brady, Kobe Bryant combo. I love that. I love that Tom Brady, Kobe Bryant combo. I'll take a look at that in just a second. Let's take a look at Net Flizzle real quick. So get rid of that too. Wow, nailed it. Cool. All right. So Netflix, long-term chart, right? Let's take a gander here. Let's just be pragmatic. Let's just draw something simple. Trend support, we got it right here. But problem is thinning out, right? Strong sell-off there. Question is it going to hold here? So same thing we're talking about with NVIDIA, right? This top on RSI was bouncing at 44, couldn't move up. Broke 44, did move up, right? So holding about 44, 45 now. If we look back at this move back in June, held above 44, 45 before the inevitable move up from like 515 to 700. So looking at this chart now, if it continues to hold trend, I'd say I'd give it a firm smash. I think this one's an easy one to trade because it's riding along that trend support nicely. So I'm going to say right now, Netflix is definitely getting a smash. Netflix is definitely getting a smash. Just need to stay sexy on that trend line, baby. If it doesn't, I'm bouncing. I'm out. I'm swiping the other way. I don't know what the right way is because I've never really been on Tinder, but I'm swiping whatever that other way is. It says no thanks. So, okay, that's Netflix. There you go. Simple and easy. Just follow the trend. The trend is your friend. If it's not on the trend, then it's no longer your friend. Look at that. That's where it topped out before, and that's where it boomed from. So we could see another boom from here, 500 plus. As we talked about, we're still holding some equity there. It's a great trade. Okay. So let's take a look. What's next? ET, Michael. What's up, Michael? ET, phone, home, energy transfer. Interesting. Here's the thing, I don't know how much upside I see in energy at this moment relative to other parts of the market, but I do like that consolidation there. Let's see, where does this make a decision? Oh, look, that's decision time right here. This is an interesting one. So see right here? Oh, that's what I could use that for. Oh, but it's got to be not green. See that area right there? It boomed right there. Demand came in and this thing pushed up to like 20 bucks. We're seeing a nice little wedge here, right? So it's bumping its head. We're curling up, curling up. The only problem is we're top right there. Yeah, breakout right there. I would say you're good to go. If it can continue to hold above 13, 14 bucks, I'd say this thing's getting a little sexy right now. I'm going to tell you right now. I like this one. I'm gonna give that one a smash. I didn't think I would looking at it originally because I'm not the biggest fan of energy right now, but the chart's there. That makes sense. I didn't know it paid a dividend too. That's pretty cool. So right on. Good stuff. Good find. Ba-bum, 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 just a girl in the world. What's up? Amazon, Amazon, yes. So this is what I was looking at with Amazon. Like I said, I already mapped this out for you guys. I don't like that we didn't hold that RSI. We wanted to stay like net positive above 50, 53 ideally, but little wiggle room ain't the worst. Harsh sell off at 140, so that's firm rejection there. That's going to be a struggle to break above. As you can see, there are two ranges here, right? There's 122 to 140, and then we basically got 140 to like 160. So those $20 ranges up and down, right? I think realistically that this was my target was 143 by December or 155 by December too. I'll just call it December. If we saw a strong move to the upside, so it looks like it's bumping its head here. It's got to stay above 122, and it is going to get that smash. 122, I like it just enough. So I'm gonna say definitely smash. As long as it holds at 122, man, it's got to hold there. There's no dice. Like I don't like that right there. Sell off, buyer buying pressure, momentum. Sorry, didn't escalate there. It's no good. Did push to new high, so that's a good sign. But I really need to see this 122 be tested, hold, and then we want to see strong push up 140, and this thing will be ripping. Tom Brady, Kobe Bryant. I'll answer yours there, right up there. Apple January 200. Let me look. I like personally, no. I think Apple's got a little more downside. I would like to see Apple around like mid 160s, realistically, and then maybe. But until then, no. I'm gonna give that one. I'm gonna give it a pass. I think those iPhone sales were less than exciting, and I think the titanium overheating and all that other shit, it's not gonna bode well. Just doesn't. That's going to get a pass. Just not going to bode well. I think some news is going to come out. I think they're going to kind of take a dump all over the new iPhone that the release was a failure. That they're going to have to recall some because those phones are getting too hot. So I'm going to say that one's going to be a pass from me, bro. Erna, I got to get rid of all this. God, that was such a crazy move, man. 100 bucks, make or break. I do like this little curly Q there. We got a little consolidation. I just don't really like. I don't know. I don't like it, but the chart is saying like my. There you go. I couldn't have said it better myself. That's exactly what I was thinking. I was like, the chart is screaming, yeah, but some enemies just screaming no. I would wait till you get this thing above 130 and then I would start paying attention because that's where your real upside is anyway, right? Like taking the risk now for a move to like 130, what's the point? But you take it above 130 on the breakout, then you've got upside to like $500, man. That's what I would be looking at. So the risk reward there is exceptional. Oh, stick man, I almost skipped you. My bad. What you said, rum, and then someone asked Disney too. Oh, run. Oh, nope. I'm gonna tell you right now, it's a hard pass. Run. I'm gonna tell you right now. I'm gonna say no way. I don't like that chart. That's curling to the downside, man. It just looks like perpetual sadness going on there. Let's do Disney real quick, and then we're gonna wrap up. Oh, Disney looks brutal too. I'm gonna have to give Disney. I just first look. I've looked at this one a lot. Pass. Well, it's gone. I think there's still more to be discovered here. I think they might just have more downside. It does look like this could be curling back up, but everything right now is saying you'd be taking a risk trading the reversal, and it's just not something I'd want to do right now. Last one, AM Diesel. Oof, one of the better looking charts. So that 115 is really the make or break, right? That's like full retracement of that tight range. Above 115, definitely going to 142. Above there, 185. There's a lot of upside here, is the point. So I'm going to give this one this one's definitely getting a smash, dude. There's a lot going on here. I think this one's got a lot of upside. Ignore the whole fib madness. Just look at what's happening right here. That 96 held nicely. That was the top of this range. If buyers can step in and we could see somewhat significant volume, I think like 125, 130 is going to be on the table. And then once we break that, then this one could do similar to what NVIDIA did and really just find a new high and really test its way up. But I like this here. I like this little sell-off consolidation. It's about to break there. And I think realistically 145 is going to be where we end up. All right, I love y'all. Stay blessed now, you hear?